Looks like we're live. Welcome everybody to CryptoNITE. Music pausing isn't working, but that's okay. How's everybody doing? I'm Phil. We're
Rhett.
here for episode 4. Here's Rhett. Thank you for the follow, Trucker Pete. We're working, right? Everything's working. We just changed computers, so stuff could go totally wrong. And if it does, please let me know.
Hopefully it runs smoothly.
We just worked through some technical issues on the fly right there, and I think we are good to go. So that would be helpful. All right. So tonight we've got some interesting stuff to talk about, actually. There have been some very interesting developments, both on the blockchain and in the regulatory space. So we are definitely going to tackle some of those today. I'll bump the volume a little bit. But yeah, like the title says, recent developments in crypto regulation. That's what we plan to talk about. Rhett, before we get started, do you have anything you want to say?
No, yeah, thanks for joining. We were going to continue kind of down the line of talking about the fundamentals of DeFi. We're going to talk about decentralized exchanges, etc. But there's been some of these developments we thought would be a timely discussion. I think in at least 2 of the last 3 episodes, people have asked questions about, regulatory risk and things like that. So I think this will be a good timely discussion for us.
Agreed. So let's get started then. I know Red has some prepared content for us. Just to give an agenda of the session, we plan to have our planned content at the beginning. Again, 15, 30 minutes probably. And pivot straight into a Q&A at that point. This time, though, we'd like to delay the questions to the Q&A to make it a little bit easier to follow our live stream if you're watching it on YouTube. So if you do have questions, stick around. It won't take us long to get to the Q&A, and we will go from there.
Yeah, and I think that goes for general Q&A, but if you have a question or a comment about what we're specifically talking about, then that's great. But it'll make it easier to follow the general Q&A if we ask those questions once we get into that portion. Yeah.
Yep, exactly. And with that, let's get started. So I'll kick us off. Obviously, there's a huge infrastructure bill going through the government right now, and to maybe no one's surprise, there's stuff unrelated to infrastructure buried in that bill. So it's been very interesting actually to watch this develop, especially with some of the crypto regulation that's come up. So I myself am not super familiar with the actual regulations. I know it affects basically anybody interacting with crypto in its current language, and that there's an amendment to switch that to make it a little bit more forgiving. But overall, I think sentiment's pretty negative in the crypto community about it, and I will let Rhett explain in detail what's going on. It's exciting for me because I've been actively learning about this regulation and still don't know that much about it. Rhett's got some content prepared for us to actually talk about the implications of what's going to happen and what are some things that are true and what are some things that might not be true.
Yeah, that sounds great. There's been a few recent developments that are pretty important, and some recent conversations. We're actually going to watch some portions of a couple of videos, and then I'm going to reference a couple of podcast interviews that, if you want a deep dive, would be these are like better, longer, more informed. Like one of them is this deep dive with a whole bunch of crypto-focused lawyers talking about some comments by the SEC chair, Gensler. We're gonna watch a couple of portions of some of these things and discuss them at a high, more summarize some of the thoughts and give some of our own thoughts. And then for those interested in deep diving, I have 2 different hour and a half long podcasts to refer you to. But there's kind of a few big recent developments. One, there's some crypto related stuff in the in the infrastructure bill, a lot of it is related to like attempts to pay for the bill by getting some tax revenue. Um, and there's been some frustration on the crypto community related to that. Not that they don't want to be taxed, but that there's the bill has some strange treatment of certain players in the crypto community, and it way overstates how much tax they could acquire. There's clearly some ignorance there on the side of the Treasury and tax, the IRS leads. It's funny, I saw a recent tweet where I guess the head of the IRS thought that they could maybe raise like $1 trillion in taxes from crypto. And a great guy to follow,
I have not heard that number.
a great guy to follow in crypto is Suzu, and he commented on it, and he was like, "Son, the entire market cap of all of crypto is only $1.5 trillion. There's
Yeah,
not $1 trillion of tax in there." So
fascinating.
it's there's some ignorance there, and then the other kind of actually what I view as a little bit more substantive is Gary Gensler, the head of the SEC, made a bunch of targeted crypto comments in a recent video, and there's some good and some bad in there, in my opinion. And then there's some recent conversations with people from the CFTC, the Commodities Futures Trading Commission. They're related to the SEC.
I've heard
So
of the FTC and I've heard of the SEC. I hadn't heard of the CFTC until this regulation came about, actually.
yeah, so these are kind of pre-regulatory conversations. So there are some laws coming down the pipe and things, but these are just comments being made by regulators so that we can get a sense of. So now we have a sense of like where they stand on certain things. People in the crypto community, I mean, I'm not speaking for everyone, but a lot of us are not opposed to crypto regulation because mass adoption requires some regulation. You're not going to
Right.
have JP Morgan adopting DeFi under the hood if they don't know what regulatory implications that has. So we need crypto regulation. We want them to be well thought out regulations, things that are not meant to stifle innovation. And, Gary Gensler, will see some of the things. We're actually going to watch some of what he says. He is not anti crypto. He actually thinks that it has a lot of power for good, and they're not trying to stamp it out. But they want to. Their big thing is they want to protect investors against fraud and things like that. So that's kind of high level what we're going to talk about. And yeah.
Excellent. Awesome. So did you want to start with the video or did you want to make your other points?
Yeah, no, I think this is a format that I've seen some others do, but what we'd like to do is watch a couple of clips from some of these videos and then just discuss.
Excellent.
So let's start actually with the SEC chair. His comments are a little bit longer, and we'll pause throughout and discuss some aspects of it.
Perfect. So we'll switch over to our screen capture scene. Oops. Not starting soon. Oh, there we go. And I'm going to add us into the picture here. So wasn't able to do that because I had to get the kids to sleep, but
this is the wrong page. So
we're gonna make us nice and small. And we are gonna live here in this area of the stream. There. You can still see us and we can still share.
So what you saw previously is that's extra that we might talk about EIP 1559 if we have time.
Bonus material from Red.
Which
Get
is
excited.
Yeah, it's a really positive development that happened today. So instead, we're going to watch a little bit from Gary Gensler. These are some comments, and then we're just going to pause periodically and discuss some things. Interested in questions and comments from you guys as well during this.
Yep. When you hit play, we'll see how loud the volume is going to be, and we'll make sure that it's loud enough for everybody watching the stream. So
40 years ago, and the movement from physical.
Let's bump it up here to about 90%, maybe. There.
Paper money to digital money. We nations, states around the globe layered various public policy goals over our digital public money system. Sanctions regimes, anti-money laundering, tax compliance. We did that sort of in this digital public money area. And that's what, to some extent, people are using a medium of exchange in crypto. Now, as a policy matter, I'm technology neutral. I would say as a personal matter, I wouldn't have gone to MIT.
Just to double check, I should have fixed the echo. So if you can confirm that the echo's gone, I can bump up the volume as well.
If I weren't interested in how technology can expand access to finance and contribute to economic growth. And I wouldn't have spent so much time around the digital currency initiative at MIT and my colleagues there if I didn't think there was something here that could be a catalyst for real change.
So just a quick comment here. So he just two quick points, which are really encouraging. Gary Gensler is relatively crypto educated. He taught and before coming to the SEC, he taught classes about cryptocurrency at MIT in the business school, I believe. And he makes two statements here that are really encouraging. One, he says he's technology neutral. He's not just like wanting to stop this. I think what we've seen from China is that they're technology like negative, like they want to stamp out crypto there, and they want to have control because of, you know, the nature of China is they like to have control. And here he's technology neutral, and then even from a personal standpoint, Gary Gensler's like, I wouldn't have even taken interest in teaching about this if I didn't think that there was a lot of positive things from it. It could be a great catalyst for good. So I think from that standpoint, like he's coming at this from the perspective of someone who is not seeking to kill crypto.
Now, a question for me is, how recent is this commentary?
This was like this week.
Okay, so very, very recent in light of the conversation that's now begun to happen around crypto regulation.
Yeah.
Awesome.
Yeah, so this is, you know, he's the current head of the SEC, and these are current comments that just might have been last week. I don't know, but these comments just happened.
Cool.
So let's
We're
continue.
gonna keep going. Make sure we mute the mic so we don't get the echo.
But I am anything but public policy neutral. In my current role, as new technologies come along, we need to be sure that we're achieving our core public policy goals. And in finance, what's that about? Protecting investors and consumers, guarding against illicit activity, and ensuring financial stability. And that's where it fits into national security interests. But how does the SEC fit into it? And I'll close with some thoughts on the national security. But the SEC, well, we have a three-part mission for those who aren't familiar: protecting investors, facilitating capital formation, and then in between, maintaining fair, orderly, and efficient markets. Investors, capital formation, and then the markets in between. We focus on financial stability as well as part of that fair, orderly, and efficient markets. But at our core, it's about investor protection. And if you want to invest in a digital, scarce, speculative store of value, that's fine. Good faith actors, by the way, since antiquity have been speculating on the value of gold and silver. So that's been around for thousands of years. Right now, though, in this digital, scarce, speculative asset, Bitcoin and others, we just don't have enough investor protection. And frankly, at this time, it's more like the Wild West than some sort of protection against fraud and manipulation in this space.
So a couple of thoughts here. There are some good aspects to this and some bad, and he'll touch on some things here in a minute. But there's just a couple of my own personal opinions here. So investor protection is a good and important thing to seek. And one aspect where that's relatively needed, some more in some chains than others, is direct fraud. There are some projects that have been like intentional rug pulls where some person or team writes some contract and they say it's one thing and it's another, and they just take people's money.
That isn't even limited to just smart contracts, right? That's, a bunch of projects. Heard about it was South Africa, I think, where two brothers founded a crypto investment firm and stole 1 million Bitcoin.
Oh, whoa.
Yeah, it was crazy.
So they just brought in investors and then boom, bounced.
It's a rug pull.
Different
just
kind,
not in a smart contract, right? So protecting investor interests can be important for sure. There's certainly been a lot of coins that have been founded with fraudulent intentions as well. Right?
Yeah, and there are a handful of those. What you'll notice is that you don't see as many rug pulls in the Ethereum ecosystem anymore because it's it's getting easier to vet projects where you can see, okay, they've been audited, here's who their audits were, they've been used for a little while. Here's, like we've talked about some of these things before. And so you'll notice exploits and rug pulls and things are becoming more and more rare, even without regulators in Ethereum. There's more of them happening on some of the other chains, but those sorts of things where I create some kind of fraudulent project and just steal people's money, there needs to be action taken there. That's a really important thing.
I did want to point out that, the fact that these sorts of activities have gone down in the Ethereum community is actually a really good sign, right? It highlights that there's a lot of people there who are trying to grow the ecosystem for the right reasons, a lot of good actors, and in order to create stability for adoption, that has to happen on its own, right? So that's one of the nice things about the Ethereum blockchain, in my opinion, that dovetails nicely with what he's saying, right? He'll probably be pleased to discover that the Ethereum blockchain is heading the right direction.
Yeah.
Already.
Yep.
Right. I mean, I'm sure he's talking about the crypto community as a whole and not just about Ethereum DeFi.
Yeah.
Right. So,
Yep.
So it'll be very interesting to see what comes out of that.
Yeah, totally. And to Matterhorn's comment, BitConnect, for those who haven't been in crypto for very long, there's a really funny kind of meme/GIF thing with BitConnect. But it was a fraudulent project in like 2017, and a lot of people got really harmed by it. So that's an example of one. Now, on the negative side of this is like with trying, I'm going to try not to soapbox too much. I've been personally frustrated by the fact that, like, often regulations that are meant to help investors or protect investors really just end up locking investors out of some of the best investments. And we've seen this in traditional markets already with accredited investor status. Like, you and I couldn't invest in Facebook pre-IPO because we weren't accredited investors. And that just ended up locking us out of massive gains. There's a really good, little conversation about this by the guy who does This Week in Startups. He's also in the All In podcast, but he talked about the fact that Peter Thiel, he is the first investor in Facebook, and he is a founder of PayPal, etc. He has a Roth IRA worth $5 billion now and he didn't do anything illegal. You can only contribute like $5,000 a year to a Roth IRA, but
from an early PayPal investment, right?
Well, when he invested, he's the first Facebook investor. When he invested there, he invested other money plus Roth IRA money because he's allowed to do that legally. And then he threw like multiple other investor bullseyes and made a ton of money. And a lot of these things, a lot of us would benefit from having access to. So restricting access, in my view, ends up often hurting us. We've already seen that in crypto in a way that's very frustrating to me and has personally hurt me. So, and we'll watch a little thing about the CFTC, but derivatives exchanges in crypto are already locking Americans out. And if you're really savvy and you can, interact directly with the smart contracts, or if you are sneaky and you can like make it look like you're not in the US, you might be able to get around that. But that stuff's hard to do, and it's illegal. And so, like, for example, just this week, one of the biggest derivatives exchanges, DYDX, that I've mentioned before, they just gave a bunch of DYDX tokens to anyone who's used their platform, unless you're American, because Americans are disallowed from using it. Well, I have a use case for using derivatives platforms. I've wanted to use them. I've been unable to because I'm American. And because I've been unable to use them, I've also, they protected me away from getting an airdrop from DYDX. And some of these
literally lost money.
Yeah, in a big way. And some of these airdrops are crazy. Like anyone who used Uniswap before their token launched, they just gave Uni tokens to. And I think it was like $10,000 or $20,000 worth of Uni at current prices, or something in that range. Maybe even more. I haven't checked it recently, but people who use these protocols have been given these things. And
I was listening to Anthony on the Daily Way talking about how stuff like this is actually preventing people from receiving free money.
Yeah. Yeah. And it's frustrating.
Sounds very backwards, right?
Yeah, it's frustrating. So that's where there's some frustration in people in the crypto community where investor protecting me from fraud is good. But locking me out of systems that I know how to use and I can go into open, with open eyes, knowing the risks, that is just locking me out of markets, and it's problematic. So that's an aspect of this that's been pretty frustrating to some of us. And we'll get actually a little bit more into the futures exchange thing. Part of the reason why futures, why we're locked out of those, is American futures regulations, which are pretty strict. They have a whole bunch of like, hey, you have to meet these 20 criteria in order to like facilitate futures trading legally. It presupposes an intermediary, and decentralized finance
Can't do that.
doesn't have intermediaries.
Yeah.
And so it's like, if it's just a protocol I'm interacting with, there's no intermediary, I literally cannot comply with the regulations the US currently has, and then they haven't given new ones. And so it's a problematic situation. And so we just get locked out. So anyway, couple of thoughts there. Oh, $6K a year now in a Roth IRA. Yeah. So yeah. And Peter Thiel's is worth $5 billion. That's just unbelievable. That guy's genius.
I plan on starting to catch up now.
Yeah.
6K a year. Let's go.
Let's go. Okay, let's watch a little bit more.
Perfect.
This asset class is rife with fraud, scams, and abuses in certain applications. There's a great deal of hype and spin about how crypto assets work, and in many cases, investors aren't able to get rigorous, balanced, complete information. It doesn't mean there aren't good faith actors, and there are many of them, but investors really aren't getting the information to judge the risk and understand the risk. And I fear that if we don't address the issues, I worry a lot of people will be hurt. Now, first, about the tokens themselves. Those tokens being offered, many of them are offered and sold as security. There's actually a lot of clarity on this front. So you see, in the 1930s, Congress established the definition of a security, but they included like 20 different items. You'll be familiar with some of them: stock, bonds, notes, but one of the items is called an investment contract. In the following decade, the Supreme Court took up what's the definition of this term: black letter law, investment contract. This case said an investment contract exists, and I'm going to quote for a moment: a person invests his money in a common enterprise and is led to expect profits solely from the efforts of the promoter of a third party. You might have heard of it. It's called the Howey test, related to an estate of William Howey that actually was about orange groves in Florida. And what do orange groves in Florida have to do with cryptocurrency? Well, the Supreme Court has upheld this test a number of times subsequently. And so further, there are other tests. There are many other determinations comes under the federal securities law. Now, my predecessor, SEC Chairman Jay Clayton, I think said it well in 2018 in congressional testimony. He said, to the extent that digital assets like, and I think he named Bitcoin, but he said, to the extent that digital assets like initial coin offerings or ICOs or securities, and then he goes, and I believe every ICO I have seen is a security, we have jurisdiction. Federal securities laws apply. I find myself agreeing with my predecessor, Chair Clayton. You see, generally, folks are buying these tokens in anticipation of profits. That's the core thing the Supreme Court said. And there's a small group of entrepreneurs and technologists standing up and nurturing the projects. Geez, anticipation of profits, small group of entrepreneurs standing up something. Our federal securities law says there's a need for some protection. And I believe.
Okay, let's talk about this for a minute. So he's saying that many, probably most of these tokens that we've been talking about in decentralized finance, etc., he believes are securities. Because they're securities, the SEC has jurisdiction over them, and they need to meet certain compliance things in order to legally persist in the U.S. Otherwise, regulators will come after them. Now, they've already come after a few select projects and accused them of selling unlicensed securities. They did it to Ripple with XRP. They're in legal dispute with them right now, and they did it with a project called KIN, K-I-N. They were a 2017 ICO, and a few other minor ones. They haven't done it with any of the DeFi protocols, and I think one of the reasons he talks in here, and we probably won't even get to it, about how they're undermanned at the SEC, so that might be part of it. But the other part of it is most of these DeFi projects no longer do initial coin offerings where they sell tokens. instead they do, I think you referred to it as like adoption, adoption funding or something, where a project launches and then they say, hey, if you use our product, we will give you our governance token, and then you could turn around and sell it if you want to, etc. But the protocol never sold anything to anyone. They just gave tokens to people for using their product. And so you can't accuse, even if it's a security, you can't accuse them of selling an unlicensed security. So they haven't come under those sorts of things. And so you'll notice that I think part of that's intentional, and honestly I think it's a better system anyway.
Yeah, I would agree.
The other thing here, though, is a lot of these projects have wanted some regulatory clarity and have wanted to comply with SEC rules, but it is really hard to know how to do so because the SEC rules around, hey, if you're a security, you need to comply with XYZ, all of the rules presuppose a different world. And many of these things, it's unclear whether or not these projects even could comply if they wanted to. Right. And so there's this whole question of like, hey, what do we do? And there's been a whole bunch of podcasts and interviews with founders that I've seen where they've said, well, why don't you just go to the SEC and ask them? And they're like, we have, and they can't tell us. They can't tell us what we need to do. They don't even really know. Yeah. And so there's this issue of if you're saying, hey, you're a security, so you have to comply with our regulation, and they say, okay, how do we do that? And they say, sorry, we don't know. That's a problem. Now, Gensler's a smart guy, and this is an issue. So what I'm hoping happens is that they draft up some crypto-specific regulation, because current regulations just are hard to apply to these things. And
putting a square peg in a round hole is what it sort of feels like when you think about it, right?
Yeah.
Fundamentally, there's some key differences that just don't match up with traditional finance, so there should be a different treatment, right?
Yeah. So if they say, hey, as you know, in order to be in compliance, you have to lock certain people out of trading on your platform, and you say, this is like a decentralized protocol we deployed to the Ethereum blockchain. We cannot stop anyone. It can't be done. Well, are you just saying that DeFi can't or shouldn't exist now? Yeah. And Gensler claims that he's not anti-DeFi, and so you have to talk about it in a different way. And one of the ways, I think maybe they've been in conversations that we don't know, or maybe they're just trying to front run this thing. But Uniswap is a good example of how you could try to comply to the best of your ability. So Uniswap is a decentralized exchange. You can swap one asset for another on Uniswap. And Uniswap, in their UI, if you go to uniswap.com or whatever, I can't remember the exact URL, uniswap.com, I believe. If you go there are some assets they've delisted. They had this whole list of assets that they delisted, and they're the sorts of assets that the SEC wouldn't want listed.
Uniswap.org.
.org.
If you go to .com, it could be a scam.
If I remember right, at one point SushiSwap bought uniswap.com, so you click on that and go to SushiSwap. So it's like a little wow. There's a little joke.
That's a big competition right there.
Yeah, so it might have been one of the Uniswap things went to SushiSwap. But anyway, so they delisted some assets, and that caused a little bit of controversy. People were like, oh, isn't this decentralized finance? You're delisting assets. And the founder, Hayden, he's like, okay, this is a good time to learn the difference between Uniswap the protocol, Uniswap the code, and Uniswap the UI. Yeah. And he's like, the UI, this is a website hosted by Uniswap, the organization. And we're a central organization, and we can choose what we list on this UI. The code is open source code. Anyone can access it on GitHub. And then the Uniswap protocol, which is deployed to the Ethereum blockchain, that is permissionless, and they couldn't, if they wanted to, delist anything off that. So if you really wanted to swap something they delisted off their UI, you could create your own UI that connects to Uniswap, the protocol. So this is one way they're like, okay, we're delisting here, but delisting at a protocol level just literally is not even possible. And so this is one of these things where if the SEC said, hey, you have to delist these things from the protocol, you're like, okay, that can't be done. And if they're like, hey, and we need to know all of these things about your team, et cetera, a lot of these organizations they're called DAOs, DAO, Decentralized Autonomous Organizations. They're groups of anonymous people just contributing to the project in different ways. It operates more differently than like a typical corporation. So you're like,
Right.
okay, how do we navigate that? We don't know. So this is one of those things where, so Gensler is saying, hey, we think probably almost all of these are securities and they need to comply with SEC regulation. Well, so my point, and this is part of the, I guess, the frustration of the crypto community, is current regulations just don't apply in a way that you could comply with it. And
Yep.
so it's an impossibility.
Yeah, it's interesting, right? And as I think about what he's saying, in economics, basic economics, you learn about buyers and sellers, and you learn about the role that the buyer having information matters, right? The more information that the buyer has about what they're buying, the closer they'll get to the actual value of that product when they're purchasing it, right? So when he's talking about investors being protected and having enough information about risk, right? I think that there's a lot of information that investors can be given. So hopefully they'll kind of key in on that aspect where it's like, hey, one of the regulations we could see is, if you're a token, that you need to provide this information to the public, and audits can focus on this type of structure to figure out how we can give investors more information about the project, right?
Yep.
Without necessarily just cutting them off.
Yeah.
So
Yeah.
just some thoughts there.
Exactly. So if they said, hey, if they, they've said, hey, we think a lot of these things are securities. Now, there are two exceptions they've already made in the long past. The SEC itself has said already that both Bitcoin and Ethereum are not securities. They are commodities. And I think they said they're commodities. They definitely said they are not securities. So this does not apply to Bitcoin and Ethereum. They haven't called out a single other project, I don't think yet, and said it's not a security. But he's implying that most of these DeFi tokens are securities. So yeah, I think the general view, I think my view aligns pretty well with the general view of most people deep in crypto, which is that, okay, fine, call these securities if you want, but you need to come up with regulation that is applicable, and we know how to interface with it. And this is the whole question of regulatory clarity that we need. As an aside on this, two of the lending protocols, well, especially Aave, they recently launched Aave Pro, which is an institution-focused lending platform, and then they have Aave, which is a decentralized lending platform. Well, they're both decentralized, but one is targeted at institutional adoption. And they've been interacting a lot with some of the European regulators. I believe at the UK is one, and saying, hey, how do we make sure that we're in compliance so that institutions can use us? Institutions can know, hey, this is, this is kosher. Yeah. Yeah. So I think almost everyone in crypto is like, actually, we really want regulation. It needs to make sense, and you need to give us some clarity so that we can take it to the next step of adoption. So good regulation is very welcome here.
Interesting comment by Artie here. He was recently asked if he thought ETH is a security, and he refused to answer.
That's Gensler, Artie. There were public statements made that it was not. I guess maybe he
himself may not agree.
And yeah, maybe he would try to walk that back or something like that. There's historical statements which are positive, but yeah, maybe it could be walked back if he said, actually, never mind, it is a security.
It is hard to decouple Ethereum and Bitcoin from the idea of being a security simply because of volatility, right? Where it's like, oh, somebody can get rich off of this. It seems more like a security than when the price is stagnant or nobody's paying attention to the industry, right? So it's one of those psychological perception things, I feel like.
Yeah, that could be partly. And one of the points that he just made, there's this test, and part of it is like, hey, you are expecting a return based on the efforts of some other small group of people. And I think when they had originally said it's not a security, what they cited was it's sufficiently decentralized. Like, oh, there's like this huge decentralized group of contributors to the project, and so you're not relying, so it doesn't meet that criteria. And on that topic, that may be a way that some of these DeFi protocols say, hey, we're going to move into that same realm by saying we're going to decentralize our projects really quickly. And then it's like, oh, if Alpha Homora is run by a DAO rather than a core team, and then anyone in the world's contributing in these ways, then maybe it no longer meets that requirement. It's not a security. Now it moves into that other bucket, possibly.
And in response here to what Artie is saying, public statements aren't necessarily binding. It helps to argue the case, but an offhand comment isn't law. Totally true.
Yeah.
It does, however, gives some insight into what they might be thinking and the direction they might go.
Yeah.
Right. And I think that's what the broader crypto community is waiting for.
Yeah.
Everybody's keying in on statements like this because they want to have an idea of what's going to happen. I think there's probably a lot of people out there waiting to act. Like, I will not lie. It is difficult for me to begin acting without insight into the future regulatory environment, right?
Yeah.
There have been multiple periods in the last few years where I've not done anything, even though I wanted to, because I didn't feel like I wanted to. I felt like I might be doing something wrong,
Yep.
and so learning more about what's officially potentially going to happen helps to reduce some of those concerns for me, at least. So.
Yeah, totally agree. And I think that will drive a lot more adoption by individuals and institutions if we can get some clarity on that. Great points, Artie. And I think I could be wrong, but I believe when the SEC said that Bitcoin and Ethereum were not securities, they were official statements by those groups. I could be wrong about that. And those could probably be walked back too. If they said, okay, we disagree and here's the substance, it hasn't been argued in court. Those were comments made.
Yeah.
Even if they're official statements by those organizations. So
many people are still waiting for what's the law going to be.
Yeah.
Right.
Yeah, and some of this will have to come down to like some court cases. And there's actually been some interesting questions there of like, can a DAO go to court? Because a decentralized autonomous organization, it's a group of, people contributing, any person in the world can, make a proposal to, this DAO. And then people who hold the token, or there's different ways to organize this, vote on that proposal, and then some other random person builds the thing and implements this new thing. And so it's like, this is not like, it's not the same sort of organization as a corporation. So like, who even shows up at court?
Yeah.
Who shows up at court if you're a DAO and you're all, no one even knows who each other is. You're just like, organizing in this way. So there's,
yeah, that's the difficult part, right? I think it's going to come down to public opinion in some really important ways, right?
Yeah.
Because given everything you've just said about DAOs, it sounds easy for illicit activity, right? And I think it's going to be pretty easy for these at least anti-crypto regulatory agencies to frame this problem as an inherent flaw, right? Since we can't bring someone to justice, right? That's a problem with crypto. And I think that's a risk when it comes to how regulations could be designed in the future. But
yeah,
we'll have to see, right? Because like you're saying, it in a truly decentralized ecosystem, it's really, impossible to hold the DAO or hold a fully decentralized platform accountable for their actions, right?
Yeah. So there's some open questions there, but I think on the whole we're pretty excited that this is being directly addressed because it will help, make it clear how we can move to the next stage of adoption, and it's a really positive thing. These are things that we want institutions to be able to adopt. It really will benefit the institutions themselves. And it'll benefit all of us to get greater adoption here. So let's talk.
But make no mistake, we want a positive outcome, right? There can be a negative outcome.
Yeah.
So
that's true.
We're hoping that the dialogue will evolve in a way that it will be generally positive. Right?
Yeah.
I think that's fair to say.
Yep, I agree. So one person to follow on this, by the way, is Cynthia Loomis. She's a senator from Wyoming, and she's done some recent interviews on the we won't show any here, but on the infrastructure bill, and she's just talked about crypto in general. She's very educated on crypto, and it's an important thing for her that we have positive regulations here and positive laws here. And there's some encouraging things there. She said, okay, most of the senators from talking to them don't know really anything about this, but some of them are taking a lot of interest. Even those on key like finance type committees are taking a lot of interest and getting books from her on crypto, etc. And so there's people in in office that are kind of pushing for healthy regulation here, where this becomes like a force for good. We don't stamp it out in order to just benefit incumbent financial institutions, but that we approach it in a reasonable way.
I mean, I think some of that can be seen in, improving aspects of the infrastructure bill right now, right? So,
Yeah.
like Anthony says on the Daily Gway, I'm glad to know that there's at least somebody out there advocating for DeFi and the crypto community as a whole.
Yeah.
So,
Yeah, and there's several, and I think we have a responsibility too to help our senators and representatives, those of us who are Americans, probably most people in this chat, to let them know that these are important issues to us and that they need to educate themselves on it and work in a way that doesn't like stifle the space. So let's watch. We're gonna watch a shorter clip, and this is an interview. So this is a podcast I've mentioned before. It's the Unchained podcast. Laura Shin is really great. And these are two guys from the CFTC. The whole interview is really good. And let me just preface this by saying these guys, it's very clear in their comments that they also don't want to stifle DeFi. And Laura Shin even mentioned in the thing, she's like, hey, if you guys are too harsh on crypto, it's just going to move elsewhere. And they're like, no, we want that innovation and things happening in the US. We don't want to stop this. We want to encourage it in a healthy way. But there's some questions here. So right now it's because of the CFTC, I believe, that like I can't participate in futures, DeFi futures exchanges, partly from them, maybe the SEC as well. And so she asks here about this thing, like, hey, she basically asks about intermediation. Let's just play the clip. Yeah, all the way up. Yep.
And Brian Quintenz. So the CFTC regulations are almost based on a policy of mandatory intermediation in a way. And what that means is that for certain transactions falling into certain categories, they're required to take place only on a CFTC regulated exchange, which, basically forces this intermediation, which is obviously antithetical to DeFi. So DeFi transactions can kind of get similar results to some commodities transactions. For instance, you can create a collateralized debt position on MakerDAO and use that to mint DAI, which is a stablecoin pegged to the US dollar, which you can then use to buy more Ether, which is basically providing yourself more leverage. But this happens through these peer-to-peer protocols. And so there's no kind of like traditional counterparty that, as you would traditionally define it. And so some of these CFTC regulations, in a way, are, they're made for a different world than DeFi. And I wanted to get your thoughts on how the CFTC would regulate this type of activity, if at all.
Let me start off on this one. So our regulations, I think it's fair to say, and it's accurate to say, that our regulations really are based on an intermediation model. They don't necessarily mandate it in every instance, but when all these regulations were being written, they were based on exchange traded models or broker intermediated models. And so many of the regulations are centered around and assume the presence of intermediaries. Ultimately, many of these DeFi applications, they're very innovative. They approach the market in a different way. Say maybe we don't need the intermediaries for everything that they're doing, and there's additional friction and cost, and we could be more efficient and speedier without the intermediaries, and they accomplish that in a number of respects. So the difficulty and the challenge is when you take out an intermediary from some of the functions in a regulatory system that presupposes their existence, how do those two systems mesh? And that's a question that really DeFi poses to the regulators and to the marketplace. That doesn't mean that you could totally do without all intermediation or the functions that the intermediaries do in terms of what they do. For example, intermediaries, the exchanges, not only match up parties, which in a DeFi protocol you can do without the exchange, but they also have a surveillance obligation and an affirmative obligation to make sure that the markets are free from fraud or or manipulation. They also basically a clearinghouse in a futures model. A clearinghouse stands behind the trade. So if one party somehow defaults, then the clearinghouse will make it up. Now you could say in the DeFi protocol, well, there's an automatic liquidity provider that will liquidate the contracts before you get to default, and that may be. And if you don't need a clearinghouse, that's an interesting development that we certainly could look at. So there's some functions I think.
So they talk quite a bit more here. We won't listen to the whole thing, but I think we got the gist of it. So there's a couple of things that I just want to touch on here. Laura Shin is right that a lot of the current regulations, and in this interview he mentions, hey, we have like a 20 point list of rules to be like a legal futures marketplace, and a bunch of those rules just don't apply to DeFi at all. And so it's like, okay, what are we supposed to do here? They recognize that, they are open to that fact and say, hey, we realize our rules are a little bit old and need to be applied in a different way. We need the functions of those things to still apply. Like, hey, we need, in a futures contract, if the contract gets fulfilled, you need to be able to make sure you get payment. And if you don't need a clearinghouse to do that, fine. There are some comments that this guy Dan specifically makes that makes me think his level of understanding of some of DeFi is still not as deep as it needs to be. Where he throws out a couple of, hey, what if this happened or this happened? And they're like, well, that's not really how DeFi works in certain ways. But overall, I view it as very positive, where like, okay, up to now, it's been kind of negative. Like we've been locked out of certain protocols because these protocols can't comply, and then they don't want to get, the teams don't want to get in legal trouble with the US, so they just lock Americans out. And these guys are saying, hey, we realize that our laws are old, or our rules are old, our regulations are old. We need to apply them in a different way. We need to be open to the fact that as long as certain functions are being met, that we're okay with this thing. Now, there's one point he made here about there's a surveillance obligation. That piece might be completely impossible to do for a protocol. Now, again, back to the Uniswap example, if you said, okay, Uniswap, the UI hosted by that team, maybe that has some kind of KYC thing where you have to tell them your name and information in order to log in. But the protocol itself cannot have any kind of surveillance. It's an impossibility. And so that's another rule that if they hold strong to would be problematic. Right. Now, what could end up happening is they say, hey, if you're going to use DeFi, you actually have to use DeFi through someone who connects to DeFi, and then they surveil you or whatever. But that piece is a little bit.
A real life application there would be like if Chase or Wells Fargo adopted DeFi under the hood, they have your personal information. Therefore, KYC, which stands for Know Your Customer, it's a way of preventing illicit activity, right? I know that this is a legitimate person. I know where they live. Therefore, the law can be enforced on them. You'd be interacting with DeFi through an entity that isn't DeFi that knows who you are. Yeah, that's really what it's about.
Yeah, and even speaking more specifically to even crypto, if you said, hey, I have an account with Coinbase and they know all my personal information, but Coinbase just got rid of its own exchange and connected to Uniswap, the protocol, and then that's where my trades were happening, but I'm being, they know all my information, they know what I'm trading, and they're limiting what I can trade in their UI to certain things. That might be how some of this plays out. So it actually might drive even more institutional adoption where people say, hey, in the US, in order to interact with certain protocols, I need to do it through a lightweight intermediary. Maybe that happens for some of these things. Maybe an intermediary is completely unnecessary for others. But this surveillance, specifically the surveillance thing, in certain applications at the protocol level is not possible, I don't think. So there has to be some openness on their side there. I'd encourage you all to go watch this video, and you'll notice that both Brian and Dan are very open and non-hostile and very hey, we want to do right by the American people and investors, and we want to not stifle the growth of the space. So I think it's a really positive development.
So I did want to add in one thing, right? The current model of interacting with DeFi protocols, right? Say I leverage my MetaMask wallet, I am the sole owner of that wallet. I interact directly with Uniswap or SushiSwap or another DeFi protocol. That model poses some challenges for existing and even some of these important principles like surveillance that they would want to potentially continue even in new crypto regulations, right? So what we're
Yeah.
really looking at here is, well, today I use MetaMask and I interact directly with Uniswap. That's completely anonymous, I guess, and that may change in the regulatory landscape. Like the requirements around how you interact with DeFi could look different. It could look a little bit more like, all right, you've got to use Coinbase to do it, but you can do it, right?
Yep. And then that would give Coinbase the green light to adopt these things under the hood. And there are tokens that really Coinbase ought to be listing right now that they haven't because they want some more clarity. Like one of my favorite tokens, the DeFi Pulse Index, DPI, they've been in talks with Coinbase and some others to get listed, and they've been like, okay, we're thinking about it, but we need to get some clarity on X, Y, and Z.
Yeah.
You get that clarity, that becomes something that you can buy on Coinbase, and that'd be good for new crypto investors, especially, or advanced as well. So there's some good things here. I think we can close out this window, and then I think maybe we just move
over to Q&A.
Yeah, we've got a half hour about, and let's just have whatever Q&A, and we can talk about more stuff on the regulation and law side. There's a lot of actually things that have happened recently that we didn't discuss as much, like the infrastructure bill. There's been some discussions there and some amendments and things. Actually, some really positive developments. Like there were some statements about who they consider a broker, and it was like overly broad and problematic and things, and it was applying to minors and things. And then they've changed that, and it's been a positive thing. So there's been some good things there. So we can talk a little bit more about that stuff if we want. Or we can just talk about anything crypto, anything DeFi. So any questions, welcome. Or even non-DeFi, we could talk about NFTs. We will do a whole episode on NFTs and some of those things, but
yeah, a couple upcoming topics as people think of questions or other topics they want to discuss. On deck, we have DEXs, right? Decentralized exchanges, just kind of going on a little bit, explaining how they work and going a little bit deeper on different components of interacting with DEXs, what you can do as a crypto interested investor, and also NFTs, right? Yep. Which is, kind of a crazy space. I was watching some videos on NFTs today. Just the mere thought of digital artwork selling for $60 million is really an attention grabbing headline, right? Yeah. So that's definitely something we plan to touch on as well, and that's honestly an area where I lack some expertise, which is why I was trying to learn more about it today.
Yeah.
It's very interesting to think about owning something digital. So yeah,
totally. Okay, Matterhorn.
Question from Matterhorn.
Got any opinion on these punk NFTs being sold for ridiculous amounts? Lots of talk about them being a free form or a form of money laundering. I have heard that same talk, which is interesting. So I have some thoughts. Do you have some you want to share first?
I actually don't. I want to hear your opinion on this. Multiple aspects of crypto get referred to in a similar way, right? Like, oh, if I want to launder money or really accomplish any other type of illicit activity, it would be logical for me to use Bitcoin instead of, other electronic funds that are easily traceable, right? So it doesn't surprise me at all to be hearing this. But I am very interested in your thoughts.
Yeah, so NFTs and the CryptoPunk project specifically are built on Ethereum. And it's interesting, these claims were made more, they're still made a little bit about Bitcoin, but they're made a lot about Bitcoin a long time ago. And then it's like Ethereum came, they started being made more about Ethereum. It's like, it feels kind of like almost every new project is getting accused of being like a facilitator of illicit activity. There have been some studies done on this, and it looks like things like money laundering and illegal, like drug markets and things being done through crypto is very rare, much more rare, even on a percentage basis, than cash. Cash isn't really traceable in the same way because, Bitcoin and Ethereum are public ledgers. And what we found is that they can track down criminals through their address more easily than people realize. So there are a couple of privacy-focused currencies that are used for criminal activity, but still not used as much as cash. That'd be Monero and Zcash, especially Monero. So I've heard that NFT claim, and I personally think that it is doesn't have basis. If you also look at what has caused the rise of CryptoPunk prices, it's very obviously not illicit organizations driving that price increase. So like, for instance, the general price of CryptoPunks went up quite a bit. It was like a week ago when Three Arrows Capital, which is one of the biggest DeFi investment funds, I mentioned one of their founders, Suzu. They just went and bought 100 CryptoPunks like instantly. I think they bought like almost every CryptoPunk that was at that moment for sale on OpenSea. And that raised the price of CryptoPunks like instantly. They are not an illicit organization. They're not money laundering with their NFTs. I think what we're seeing more with these CryptoPunks is that because it's a very early stage. It was like one of the first NFT projects, and what they are, for those who don't know, is they're little pictures of like a face, really low res. It looks kind of like a little like Bitmoji face. And there's, I think, 10,000 of them, 10,000 unique ones, with various attributes that make them more or less rare. And what a lot of people in crypto will do is they'll buy a punk, and then they'll put that as their Twitter profile pic, and then they'll have like an anonymous Twitter account. And there's definitely some aspect of status that gets bestowed on you if you have a CryptoPunk if you own a CryptoPunk and you have one as your Twitter profile. You have some status in the crypto community. You're like, oh, you're some OG. Like that's like you saying, hey, I'm kind of a big timer in the Ethereum community. And like Jay-Z, last I knew, Jay-Z's current Twitter profile pic is a CryptoPunk.
Wow.
So like there's some big people who are doing this. I don't own a CryptoPunk. I probably would have made a lot of money if I'd bought one when some of my friends told me to. Like I have a few friends that are really into CryptoPunks, and they kept telling me to buy one, and I'm like, I like my ETH too much. Well, denominated in ETH, CryptoPunks have gone way up in price. You know, I wouldn't say I necessarily regret it. I think the punks thing is a cool movement though. So I think that's what's causing this is you have a lot more people getting into Ethereum, and CryptoPunks are a status symbol within Ethereum in a weird way because it's status of an anonymous account. It's not status in the way that I'm going to like drive around a fancy car and people see me as a person. It's like your anonymous profile has status is how a lot of it is now. So anyway,
I have some thoughts, and this is coming from a non-crypto view, right?
Yeah.
One of the things that I find very interesting about crypto adoption as a whole, right? If you just think about it, before you knew anything about crypto, if I came up to you and told you that I have this world-changing, innovative thing, and then I proceeded to tell you that it was called Bitcoin, like right there, I feel like crypto gave itself a big obstacle in mainstream adoption. Like it doesn't sound like a legitimate word. It's become a legitimate word over the last 10 years, right? Yeah. As people have realized this is not going away. It really is called Bitcoin, right? And you know, the idea, if you're not well versed in security practices and you don't know that the crypto in cryptocurrency is you know, alluding to like cryptography practices, the word crypt is weird. Another barrier to adoption, right? And I just find it a little bit funny and ironic that the biggest NFT status symbol thing is called CryptoPunks. Like it's almost like the cryptocurrency community isn't able to come up with names that would be widely and easily adopted by the public.
Yeah.
I just find that to be kind of interesting, right? Because a person who doesn't know anything about crypto today, you walk up to them and say, "Hey, I bought a CryptoPunk for 20 Ether," you know? Yeah. What are they going to make of that statement, right? Yeah. And so these stories are coming out, right? The news articles and publishers are publishing stories about NFTs being sold for ridiculous amounts. And if I stumble on that article, it's not a great entry into cryptocurrency because what is a CryptoPunk? Like I have no way of even conceptually beginning to understand that. And I have to be willing to do a whole bunch of extra reading just to get on board. So I don't know. It's an observation I've had about crypto. I find it kind of funny.
It's interesting, and I don't necessarily disagree, although there is a group of people who surprisingly have onboarded into crypto that I've seen, and onboarded in crypto through NFTs. Or like they didn't really have as much interest in the DeFi stuff, or maybe didn't hear about it, or didn't have as much interest in like, currencies like Bitcoin. And then suddenly they're like, ooh, I can buy this digital artwork, and there's all this cool stuff. And suddenly they're like huge fans. In fact,
Yeah.
I know one person who was a Bitcoin maximalist. He only owned Bitcoin, and he thought Ethereum was no good and all these others. And then he bought a CryptoPunk actually, and suddenly like went wild. And he owns tons of NFTs and is all sold on Ethereum now and stuff. So it can, for a certain type of person, it can be a great onboarding tool. But I still don't necessarily disagree. So that was a long answer on the punks thing. I think the money laundering thing is, I personally think it's garbage. Like, I don't think, from what I've read, I don't think there's any basis in it. And if you're wanting to launder money, you'll do better using Monero or something else.
One of the biggest reasons I think to follow that line of thought, Matterhorn, is the recent Colonial Pipeline ransomware attack, right? If Bitcoin was really that easy to just perform illicit activities, it would have been very, very hard for the government to figure out how to get that Bitcoin back, right? But they were able to do that, right? And surprisingly, the price of Bitcoin plummeted that day.
Yeah.
But it's almost like people were thinking, oh, it's not as secret as we thought.
Yeah.
But public blockchains aren't that secret, right? Like that's kind of the thing. So
Yeah.
the privacy focused coins are a different beast entirely, but they're still blockchains. They're still ledgers of transactions, right? They could be technically decoded, right? So I just, I find that interesting. But moving on to the next question. Sorry.
There are, by the way, some coming developments, probably in more like the 2 to 5 year range for Ethereum, that will bring additional privacy to Ethereum, and I think in a good way. We can talk about those in another episode. But right now, there's not as much privacy as you might think, and that's not necessarily a bad thing. Sorry. So next question, Artie.
Did the amendment to the infrastructure language actually pass? I haven't heard. I listened to the Daily Gway early this morning. He did not say that it had passed, but that it was on the table and that Americans should follow up with their elected leaders to get that to pass. But at least it's on the table.
Yeah, as of this moment, all I saw were proposed changes, and they were a step forward. Although there was still some language that I still would have preferred is different. But I'm not sure at this moment if it's like officially in there or not. Matterhorn, some of these are being sold for more than Picasso's. I mean, digital art NFTs are definitely like the new high-priced art. The last I knew, the most expensive NFT ever sold was, I think it was $69 million, in the somewhere between $60 and $70 million. And that record might not stand for long. We'll see. But yeah, there's a lot of interest in that, and it's really good for creators. If you're an artist, it solves that problem of, oh, I'm Picasso and I sold all my art for $1,000 each before I was famous, and now I'm famous. All the people who bought it get to benefit more than me, because you can build royalties into these NFTs so that if who I sell it to resells it, I still get a cut of that. And so there's great things there. That's
a very unique dynamic that you can't replicate in reality.
Yeah, you can just build that in the smart contract, which is awesome. Just wait until GameStop's NFT. So this ADHD guy, appreciate the comment, and that's interesting. GameStop did announce that they are launching an NFT project, and I personally don't know a lot of details about it. I know that they're starting to play in the space, but I don't know exactly what's going on. I'll research that, and when we have our episode on NFTs, I can where we can speak to that a little bit more too.
Yeah, I know a lot of people that would be really happy if the mother of all short squeezes happened.
Yeah.
Yeah. So moving on here, what do you think of Voyager token? I had never heard of it. I literally Googled it right here as I read it in the chat. Have you heard of Voyager token?
I have not. Appreciate the question, Trucker Pete.
Well, let's do a little diving, just to get a quick overview on what it is. So I don't know if CoinMarketCap is the best place for us to look at it.
So
But
it's
there may
so
be.
it's price spiked like crazy.
Yes, it did have a
Um,
big price spike.
how long has it been around? Been around since January 18.
Of
So it's been
2018.
around for a long time. It came out of like the ICO time. Is it an ERC20? Is it on Ethereum?
What is Voyager Token? Voyager Token is a cryptocurrency broker that provides investors with a trusted and secure access point to crypto asset trading. Interesting. Built to serve both retail and institutional investors with a nigh instant solution for trading crypto assets. Appreciate the use of the word nigh there. Supports over 55 crypto assets and unique smart order routing technology.
So it sounds like it's some token associated with an exchange of some kind. Doesn't sound like a decentralized exchange. It could be the equivalent of, hey, I'm Coinbase and I have a Coinbase token, but it could be a decentralized exchange. I don't know.
Yeah, that's interesting. Maybe this could be a good thing for us to revisit in a future episode.
Yeah, and it's trading. If we look where it's trading, Binance, HitBTC, Uniswap. So it's probably an Ethereum-based token, an ERC20. Yeah. So Trucker Pete, appreciate the question. Yeah, I think I had seen the ticker VGX before. It looks familiar, but I've never read about Voyager before today, and we will both go do some research. And if you want to, join us next week, we'll bring that as one of the questions we can address.
Yeah, I think that's a great idea, actually.
So,
that's one thing I'd love to do, right? From week to week, questions that come up, if we don't have the answers, we revisit them. Save some time at the beginning of next week's Q&A to revisit.
yeah, that's a good idea. So I just wanted to go to the DeFi Pulse and see if it's on there. Can I just...
Yeah.
Voyager. Okay, it's not on DeFi Pulse. It may not be a DeFi protocol. This isn't a exhaustive list, but it covers like the big tokens, and I'm not seeing it. So, yeah, Trucker Pete, we'll do some research and let you know. There's a Voyager stock. Okay, so maybe there's a Voyager stock and token. That's interesting. Yeah. So, yeah, great question. We'll come back to it next week. So EIP 1559 is here from Matterhorn. Does this make Ethereum deflationary as of now, or does that come down the road? So yeah, EIP 1559 we were considering discussing tonight, and we decided not to. We're going to do a deeper dive on that, but we're going to obviously discuss it at least in part here. So high level, real quick, EIP 1559 is an EIP is an Ethereum improvement proposal that passed. It took like 2 years to get through, and it improves Ethereum in a couple of major ways. One, transaction costs become a lot more predictable. And so me as a user of Ethereum, knowing how much I need to pay in gas to get my transaction to pass is a lot easier. So that's a really big improvement. And then the other one is part of what I pay, that Ethereum, instead of going to miners, gets burned. And what that does is it aligns Ethereum's, I guess you could say, price and scarcity with Ethereum usage, which is a really positive thing. The more Ethereum gets used, the more scarce Ethereum becomes. And so it aligns the network with the token, I guess you could say.
That also means that the more Ethereum is used, the more Ethereum is burned. It's not a flat amount of Ethereum getting burned.
Exactly.
It is dependent on usage. So the more I interact, if I were to start sending more Ethereum to different protocols or different, interacting with different smart contracts, if I were to increase my activity, I would be responsible for a greater amount of ETH burn.
Yeah.
Right?
Yep. So a couple of thoughts on this, Matterhorn. I watched it a fair bit today. It went live today. And if you watch like minute by minute, at some moments today, Ethereum was deflationary by a lot, and at some points it was not yet deflationary. So at a high level, if gas prices, we've talked about that before, that's how expensive it is at this moment to transact on Ethereum. If gas prices at this moment are about 115, I think, or more, then at that moment, ETH is net deflationary. That number, after we merge into the staking, full-on staking, and get rid of mining, that number moves to 11. At that point, any gas prices above 11 will be net deflationary. So I think let's do two quick things. Let's look and see what gas prices are. We can see if it's deflationary in this moment.
Let's do it.
So ETH gas station. So at this moment is not deflationary. How do we share?
Screen capture topic.
So gas prices right now are 43, and it would need to be a little bit over 100 to be net deflationary. There was a moment today when I saw gas prices were like 400 and something, so it was way beyond. And then let's look at this.
Now, this is a bit lower than last time we looked, right?
Yeah.
Pre-EIP 1559 isn't one of the effects of it that net, average gas prices will be decreased.
Gas prices should decrease, all else held equal. I think net gas prices will probably actually end up increasing until we get roll-ups more widely distributed, because EIP 1559 is such a positive development, it should induce demand. So if demand were the same, gas prices should be a bit lower. We can talk about why at some point. But it's such a user experience improvement that there should be more use, and I think gas prices will probably actually go up, not down.
Interesting.
Yeah, so let's go to ultrasound.money. This is a really cool website. So this tracks how much ETH is being burned. So if we come down here, we can see, okay, the total ETH that's been burned so far is 3,605. You can see what are the sources of this burn. So a lot of ETH is burned from Uniswap. V2 and 3 together make up a large portion. And then OpenSea, and you see this random address. I actually Googled this address earlier, and it's an NFT project that just launched today. So that NFT project launched today, and a bunch of people went wild minting the NFTs from that project. And that those people going wild cause gas prices to go boop, way high. And OpenSea is an NFT platform. So you can see the usage of Ethereum is like overwhelmingly one of two things: people trading assets on decentralized exchanges, or people buying and selling and minting NFTs. So those are the two things that are kind of like majority of the usage of Ethereum right today.
Interestingly, it shows the amount of burn per block, right? Which each block has a fixed block reward. So you could wait for gas prices to spike and come and take a look at the burn. And if the burn exceeds the block reward, ETH would be net deflationary in that moment.
Yeah. Mm-hmm. Yeah.
Which I don't remember off the top of my head what the block reward is.
Yeah, at this moment, I don't know what it is either. But I know that it equates to about 100. I think it's 115. It might be 120 or 110. Just over 100 Gwei when ETH gas station, when this number here is just over 100, then the blocks at that moment will be deflationary. That's kind of a good rule of thumb for you. So
that's cool.
Yeah.
I mean, it's certainly less inflationary, period.
Yeah.
Right? Given that there is some burn occurring in every block. Yeah.
Reduced inflation, is it enough to go straight up deflation? Is that's a question. We'll see how this plays out over time. It's a really big improvement, and actually someone pointed out recently, this is the biggest single improvement to a blockchain that's been made since Ethereum and Bitcoin came into existence. Ethereum has two other really big improvements coming that will be even bigger than this, but this is up till now, it's very big. And it's not just all about, hey, let's make Ethereum go deflationary to make the price go up. There's a lot more to it, and it's really positive, really, really well thought out. Yeah, we can have a whole episode on this one.
Yeah, awesome. Great question. We've got 5 more minutes, so if anybody's got any other burning questions, this is your chance.
Yeah, hit us up with a good one.
Or if you don't have any questions, send us some of the topics you'd be interested in learning more about, and we can prioritize those topics in our future episodes.
Yeah, that would be great too.
I did want to test one thing out.
Do an exclamation point, maybe.
The alias should work, but we've created a Discord for CryptoNITE, so you don't have to join the Brotherhood anymore. And the conversation can be crypto specific. So would invite all of you to join the Discord. I'm part of a server that Red is also part of. That's a very lively discussion about cryptocurrency. We'd like to replicate that in our server. And what I'm excited about is we will have something for everyone. I've seen basically long form analyses written by Rhett on complex crypto topics. So, if that's what you're interested in learning about, that's going to be a great place for you to discuss and learn more about those things. And also, we'll be able to answer questions as they come up. We'd love to be more engaged, grow the conversation, grow the community, and really grow adoption of Ethereum and DeFi and crypto in general.
And
So,
more than the long form complex stuff, for those who want to deep dive, we can have some of that. But for those who don't, a lot of the goal of this is to make crypto stuff a lot more accessible.
Yeah.
So a lot of, we can have a lot of simplifying discussion. We're trying to get better at that on these as well. And then, we'd love to see in there or hear, proposed topics.
Not only that, we'd like to host some external information like, hey, here's a list of good podcasts you can listen to if you want to learn about crypto. Here's a list of good books you might want to read. Here's a list of smart people to follow on Twitter, just to facilitate just general acquisition of knowledge around crypto and DeFi. So I've been learning a bunch throughout this experience. I watch something other than computer hardware videos now, which is very unique for me. But I've been quite interested actually in the development of crypto. I think it's exciting because it feels like the internet of our time.
Yeah.
Right. So I think it's really an exciting space. So please join the Discord. If you haven't subscribed to our YouTube channel, do that as well. We'll have this video up within the next 48 hours. And we also have our first 3 episodes there. So if you're looking to learn more basic concepts, I'd encourage you to check out our first video. But each video has a descriptive title to help you understand what you'll find in that video. So again, the purpose of this series of live streams, podcast, if you will, is to spread education about cryptocurrency and decentralized finance. It's a very unique world that's, if you don't know anything about it, it's growing rapidly right under your nose and you have no idea.
Yeah.
That's what I realized a few months ago, is that this has all been happening and I had no clue. So
Yeah.
any thought? Here's a question for Matterhorn. We can wrap up on this one.
Yeah.
Any thoughts on why Elon is a Bitcoin maximalist and not Ethereum?
This is a great question, and I have some thoughts here. So there's a really good interview I'd suggest watching to anyone here interested, where it was at a Bitcoin conference, and I'm forgetting the name, but it was a conversation with Elon, Kathy Wood from ARK Invest, and Jack, Twitter's
Dorsey.
CEO. Yeah, Jack Dorsey. And in it, Elon talked about a number of things. And he said specifically, he's like, I own 3 crypto assets, Bitcoin, Ethereum, and Dogecoin. So he actually owns Ethereum. He sounded positive about it. The other point there is Vitalik did a recent interview with Lex Friedman on the Lex Friedman podcast, and Dogecoin came up, and Vitalik talked about that, and he talked about how to scale properly, because Elon had made some comments about how to scale Dogecoin that are like, some people in the crypto community are like, well, if you do that, that's actually problematic. And Vitalik talked to some of that. And then Elon quote tweeted a link to that podcast and said, I basically agree with Vitalik. And so my view is that he's not a Bitcoin maximalist. My guess, he did say in that first interview I mentioned that Bitcoin of the 3 is his biggest holding. Bitcoin biggest, then ETH and Doge. My guess is that over time that inverts and he owns more ETH than some Bitcoin and Doge. But he it seems like he's following the space in a smart way, and he likes to meme and joke and kind of poke people on the internet. But when I've seen him talk seriously about it, he seems smart and thoughtful, and so I wouldn't call him a Bitcoin maximalist. I would call Jack Dorsey a Bitcoin maximalist, and which I find interesting. But yeah, it's a great question.
I will say that I did find it interesting the period of time that Tesla was accepting Bitcoin as payment and then walked it back. I feel like a lot of that was driven by public pressure, to be honest. If Elon had, thought prior to accepting Bitcoin that it was a huge environmental waste and it was pointless and it was bad for the world, then he probably wouldn't have decided to accept it initially. So I am interested to see what he does next. One interesting thing I realized throughout this whole ordeal is that having started PayPal, he's not a complete noob, right?
Yeah, he knows a lot
he
about
actually
money.
does know a lot about how value is exchanged, and as a result, I think his voice isn't just a meme voice. There can be good insights coming out of that. So
Yeah.
I'd be very interested to see what happens, especially with Doge, where there's been hints of him actually getting involved with the development team.
Yeah.
I'd like to see what comes out of that, right?
Yeah. Who is currently involved with the Doge development team is Vitalik.
Really?
Vitalik,
I
in
did
that
not know
episode that Elon agreed with, they asked like, okay, how would you scale Dogecoin? And he's like, well, I would like create a good bridge between Doge and Ethereum, and then Ethereum can become kind of the settlement layer for Doge. And there's some
Interesting
details there. Anyway, Vitalik has been working with the Doge devs to figure out a good a Doge to ETH bridge. And so there are ways that Doge is currently being bridged into ETH, but if you can natively bridge it, it's better. And we won't get into all the details there, but yeah, it's I agree. Musk is smart. In that interview with those three people, Musk had some really good points, and I thought that like he had some really good points even about scaling. And he spoke a little bit to some of what he had said before about, hey, we should shrink the block time, increase the block size. And he spoke to that, and he's like, yeah, as technology gets better, you can do that. And the Ethereum community agrees. The block size of the Ethereum network has slowly increased over time as you can do so as technology allows you to do it without sacrificing decentralization and things. So
interesting.
Yeah.
I'll have to go watch that. I'm actually really interested in that. That's something that happened before I was really paying attention.
Yeah.
I actually did see his quote where his tweet where he said, "I pretty much agree with all of this, but I didn't watch I wasn't yet interested in crypto again." So
that's a great episode of the Lex Friedman podcast. Anything with Vitalik's great. But yeah, also the episode with Elon Musk, I highly recommend people to watch it. And it's recent. It happened like this month, I think. So yeah, good question.
Awesome. Well, with that, I think we'll wrap. Rhett does need to take off tonight. And we do plan on trying to keep our live sessions probably a little bit shorter than 2 hours. Something around an hour and a half is what we're targeting at, just to have it be consumable in the YouTube format a little bit more as well. But again, join the Discord. Let's talk about crypto. Let's learn about crypto. Follow our YouTube channel. Subscribe to our YouTube channel. And most of all, tell your friends and family, right? I've had so many conversations with coworkers, other people that I interact with in my community, and I'm always surprised. So many people are wondering about crypto. Earlier today, I called my cousin about a question related to video editing and told him that, I was using this program to put some videos on YouTube about cryptocurrency. And he's like, hey, can you teach me about crypto? And I was like, that was completely I didn't prod him in any way to say that, right? He's just like, oh, actually, I really want to learn about crypto. Can you teach me? And I was like, well, turns out we have a series of crypto live streams for you. Not only that, I've had conversations with random coworkers, just in passing, I'll mention crypto will come up and they'll say, I've actually been thinking about this, right? So many people are thinking about this. This is really our moment, right? It's on the edge of so many people's thought process right now. Some of them are, actively pursuing it. Others are thinking, well, we'll see what happens. It's really the time to educate, our parents, our siblings, the people who are less likely to go and engage on their own. And that's really the purpose again of CryptoNITE. It's a night of crypto. That's why we're here.
Yeah,
So
I want to say, by the way, there's been a number of you that have come to lots of these and actively participated, and we really appreciate that. Like, really glad to have you here. Um, Glad to have those of you that are new as well. Um, like these would not be very interesting if it was just the two of us talking without your comments and questions and all of that. So really
that is
appreciate you
true.
guys.
Thank you. Thank you. With that, I think we will wrap up. We'll see you next week for sure. Thursday at 8:30 Mountain Time. And maybe